Okay. Good morning, everyone. Thank you very much for joining us this morning. We are open, the webinar is open, and we're just waiting for our participants to come through. We will start in a couple of minutes. Yeah, hi, good morning, Komba. Robert is also here. And I think we're at full capacity now on our panel, which is really great. So yeah, we have some participants joining. Obviously, there's a lot more that we're expecting to come through. So we'll just wait for a few more people to come in. Okay. Okay. I think we'll begin as we wait for those to come through. So good morning, everyone. Thank you so much for joining us here this morning on the launch of the Zambia Fintech Landscape Assessment, which was conducted by UNCDF. And this webinar this morning is also hosted by the UN Capital Development Fund. As we'll hear later, the FinTech assessment was conducted by UNCDF 5 years after the first one was released. And this is an exciting and real critical document to understand what the FinTech sector in Zambia looks like, and also to explore where the sector is heading in terms of growth and development of the sector. My name is Mali Kambandu, and I'll be your host today. I'm a knowledge management analyst at UNCDF. This is quite an exciting webinar, as I said, because we received over 130 registrations. So we're expecting, obviously, the group to be much bigger. Hopefully, everyone will join us this morning. We have participants who are here from private sector, public sector, from academia, those who work in fintech and finance. So it's really a whole diverse group of participants. And we're really grateful that everyone is present and took the time out of their schedules to join. This morning, our agenda is composed of 4 parts. We will start with the opening remarks, and then we will go into the findings of the FinTech study. After that, we will have a panel discussion on the current state of Zambia's FinTech by some renowned industry leaders. So that aims to be a really important and interesting segment. The last segment of our event this morning will allow for participants' questions. Please type your questions in the chat, in the Q&A. My colleagues in the back will collate those questions, and we will address them through the moderator at the end of the session. Also, please note that this session is recorded, and we will share it with the full registration list at the end of the session, and as well as other learnings that we have gleaned from the panel this morning. So without further ado, I would like to welcome Mr. Isaac Holly, who is the country lead at UNCDF, to deliver opening remarks. Good morning, Isaac.
Good morning, Mali, and thank you. Ladies and gentlemen, good morning, good afternoon to all of you from wherever you're joining. It's our hope that you are well. We are joined online from a diverse segment of stakeholders, like Mali has mentioned, ranging from private sector players to government counterparts, colleagues from UN sister agencies, and members from the cooperating partners who are working here in Zambia. UNCDF warmly welcomes you here today. It's delightful to be here to participate in the launch of the Fintech 2023 Landscape Assessment. And we last conducted this research in 2018. In the last research, it's revealed that close to 25 licensed fintechs operated in Zambia, and predominantly they were operating in the payments and money transfer business. A handful were also setting up lending products and services, while others also operated as aggregators. In 2018 Fintech Assessment Study, significant discussion then were centered around the upcoming national financial switch. The discussions revolved around the role of the fintechs and whether it would be a positive or negative disruptive partner for the financial sector and its players. While the debate on the national financial switch still continues, it has evolved, with discussions tilting towards how it can benefit it can be beneficial to the fintechs and the whole financial sector. The 2018 study also reveals significant challenges that fintechs faced then. Some of these challenges included the limited innovation because financial service providers were very protective and not willing to provide open APIs then. Fintechs were generally viewed as competition and less of additives. There were also uncertainties with regulations because policy and regulatory players were still grappling to understand fintechs and how best to support the growing sector. When it comes to skill sets, digital and technology skill sets were limited at that time, but were growing. Also not surprising, the level of investments into technology sector was low, with financial institutions shying away from particularly financing fintechs, who they always regarded as risky. Today, and slightly over 5 years, we observe a significant change. However, a few similar 2018 challenges have either partially been resolved, but largely remain unresolved. My colleague Samantha Malambo will delve into the 2023 findings momentarily. With support from our close partners, the Payment Association of Zambia, this morning we are glad at the UNCDF to release the 2023 Fintech Landscape Study Assessment. We would like to thank every institution and individual that has been involved, right from providing us the prerequisite information and data necessary to conduct this study and to develop this report. We would like to especially thank the report reviewers who provided quality control checks. This included Mr. Mobanga Kondolo from the Security Exchange Commission, Mr. Jack Gusha from the Bank of Zambia, Ms. Fatma Abad from NATSEV, and Mr. Simonza Muyangana, hope I pronounced it well, from Bongo Hive. We at the UNCDF remain grateful for your valuable insights, input, and technical additions that you accorded to the study. Allow me to thank the panel members who have agreed to join us later today during this launch. They will help us delve into the findings and unpack some of the key revelations of the study, as well as give us their perspective to the future of fintechs in Zambia. I wish you all good listening and participation to this event. Thank you.
Thank you very much, Mr. Holly, for your remarks. Ladies and gentlemen, please welcome Mr. Robert Phiri, who is the CEO of the Payments Association of Zambia, who will be giving our keynote remarks this morning. Good morning, Robert.
Good morning, everyone that's joining this meeting. It's really an exciting opportunity for us, and what has been going on in the background. And as has been mentioned by Isaac, this assessment is built up from what had been done in 2018. And for us, the core and the challenge has always been to have information and data available for business decision-making processes. So we understand that the last assessment was in 2018, and it's taken us to be able to do something. We continue to echo the need for these reports to be done, at regular intervals. And I think 5 years is a bit too long. We hope that the UN can then commit itself to ensuring that's done within very short intervals. As has been mentioned, we have continued to see growth in the fintech landscape, particularly of financial inclusion for the unserved and underserved population in our communities. But again, like we keep mentioning, the challenges are still vast. There's a lot of opportunity for industry players as well as regulators to grow. And I do not wish to delve into details of the report, but you'll be able to see that we still have issues in terms of even internet connectivity, still very low, access to smartphones, still very low. We've made some progress in that regard, but there's still a lot more that we can do. The other issue and echo is what has already been alluded by Mr. Isaac, and it's the issue of investment and financing of fintech startups. Even though we have seen some progress in terms of how much is coming into the country, the challenge continues to be that we are not able to track how much is coming in as a country. Perhaps that's another opportunity that we have as a government, as regulators, as well as development agencies, to be able to have a resource for information where investment into is being recorded, and so that then we have the data as well as the numbers. I think particularly for the Payments Association, it was to have participated in the preparation of this report, and we know that a lot will be achieved through the partnerships that we have established, not only with the UNCDF, but also would like to commend, I think, the central bank with what it continues to play in ensuring that this collaboration among the key stakeholders. So thank you so much to UNCDF, but also to the role that they've continued to play. We see on many platforms where we exchange information and learn from one another, whether at country level as well as at continental level. But we continue to learn from colleagues in different regions as well as the global stages that, there isn't much collaboration as well as the players in those countries. And so Zambia presents a very unique story when we are sitting in these platforms. Ours is a unique story because of the policy that the bank has in ensuring that collaboration. And we are so happy that the collaborative framework as well is now functional, beginning to a lot more harmony in terms of the growth that we continue to see. So we are really excited to learn about what the findings are, and we look forward to many more of such in the future. Otherwise, thank you so much for your time, and we are happy to be here.
Thank you so much, Mr. Phiri, for those remarks. The sound was patchy in and out, but I think the essence of what you shared was important, that this information is needed in the market frequently. And yes, we all are looking really forward to what it is that Samantha and our other colleagues will reveal about the fintech sector in Zambia. Thank you so much for that. We'll now take a short poll just to see what it is that we think of where Zambia's fintech landscape is at the moment. It's just a couple questions. It's not like it's homework or school or anything difficult like that. But please go ahead. The poll has been launched. And after that, after those responses come through, we will then go into the findings of the fintech assessment. So it's just a couple questions. How many fintechs do people think are operational here in Zambia? And the second question is about ownership of fintechs. Are the fintechs majority locally owned or are they majority foreign owned? I'll just give it to the minute for our participants to respond. We're at 53 seconds. I'll just give it up to 60 and then we'll go into the main part of the presentation. I see there's a hand raised. It would be helpful if you could type your questions in the Q&A or in the chat to the panelists or me or Samantha as well. And then we'll address your questions at the end of the panel discussion. So we'll end the poll now. Quite some interesting responses here. I'll share the results real quickly, just so that we can get a sense of what came out. And yeah, it's interesting. And I think these questions will be answered by Samantha as she goes through the findings of the study. So I would now like to hand over to my colleague, Samantha Malambo, who is a policy and innovation analyst here at UNCDF, and she will go through the findings of the assessment. And just to let you know that the actual document will be published during the course of this webinar, but toward the end of today's program. So you can look out for that. I'll share the link in the chat, but definitely alert all participants when the report has been published. And now over to you, Samantha. Good morning.
Morning, and thank you, Mali. Just confirming everyone is able to see the slides.
Yeah, we can see the slides.
Okay, thank you. And good morning once again, and thank you so much for joining us today. I'm really looking forward to the discussions that will follow. Like mentioned, my name is Samantha Malambo. I work as the Innovation and Policy Specialist with UNCDF. And I have the pleasure today of presenting the findings that came out of our study, which was conducted for the better part of last year and the earlier part of this year. So without further ado, just briefly in terms of the approach that we chose to take with the study, the first thing we wanted to understand was the nature of fintech businesses, as well as the demand for their services across different customer segments. The second thing we wanted to understand was the fintech ecosystem and how fintechs interact with other stakeholders within the ecosystem, be they partners, competitors, regulators, etc. The third thing we wanted to understand was the availability of talent, especially in the areas of finance, technology, as well as entrepreneurship, and how these can support fintech growth. And finally, we wanted to understand the funding environment around fintechs and understand both the needs and the opportunities from the fintech's perspective, as well as the investor's perspective. Really briefly, what we'll talk about is some of the trends that are driving fintech growth within our region, so sub-Saharan Africa, but then also look at an overview of our fintech ecosystem in Zambia, as well as the typologies of Zambian fintechs that exist. Touch on some of the recurring themes from the discussions that we had with various fintech stakeholders. And then finally, for those looking to work with or support the growth of the fintech sector, some of the things that need to be kept in mind by way of recommendations. Really quickly, our fintech ecosystem market within sub-Saharan Africa has vastly the growth of our fintech market within sub-Saharan Africa has vastly outstripped global growth for the last few years and is projected to continue to do so through 2025, growth of about 20% year on year for the sub-Saharan African region compared to about 7% globally. So what are some of the things that are driving that? The first is a massive push and a need for financial inclusion, with the majority of our populations being unbanked. The second is a customer's need, and this links to kind of the one below it, which is a demand for remote and efficient digital solutions as an alternative to cash. The third is that our continent is the youngest on the globe, and with that, it's also fast growing. And with that comes some tech savviness and a lot of demand for tech-related solutions. The other one to highlight is that the African Development Bank estimates that Africa's middle income population has tripled over the last 30 years and will double over the next 10. So we're really this booming middle income population segment. And then an increase in especially network coverage and phone ownership. Smartphone or not, phone ownership has really increased over the last couple of years. And then finally, increased international interest in the African tech startup scene. Now into a really high level overview of our ecosystem and who is doing what around the fintech space. You obviously have the fintechs themselves, but our regulators and our policymakers play a key role, especially in market development, encouraging the testing of new products and developing tailored regulation. Private sector collaborators play a key role in things such as running industry sandboxes, developing opening APIs, as well as leveraging fintech services for their own internal operations. Development partners will do things such as acting as angel investors through various innovation challenges, as well as acting as neutral brokers to facilitate partnerships. Incubation and innovation hubs support ideation, skills development, and they provide various services such as affordable co-working spaces. This list is not exhaustive, and there is also overlap in activities. You'll have incubation hubs facilitating partnerships. You'll have private sector collaborators acting as angel investors. So there's really a lot of cross-pollination, if you will. Now into the market itself. Like Isaac mentioned, in our 2018 scoping, we found 25 fintechs. In this scoping, we found about 57, and I say about 57 because I didn't go into our methodology, but essentially our chosen sampling method was snowballing, which was essentially identifying an initial group of fintechs and through them identifying additional fintechs. So that number of 57 could very well be higher. In terms of what comprises that 57, about 12% of those are providing enabling technologies. So software solutions that enable critical functionalities within the financial industry. About 25% are providing some form of money transfer, whether it's P2P, person to person, person to business, or business to person. The largest growth has been seen in the digital lending space, with about 31% of fintechs having fully digitized lending processes from initiation all the way to disbursement. And this has grown pretty significantly from, I think, our 2018 scoping identified 5, whereas our 2023 scoping identified 18. About 20% are providing, and this is what we previously called aggregators in our 2018 scoping, but essentially some form of payment gateway or payment switching functionality to move funds across the financial ecosystem. About 9% are in the savings or digital investments space, and about 3% are in the insurance space. The other thing we wanted to understand was around the nature of business activity, whether it's business to business or business to customer. And the largest majority of fintechs are in the business to business space. About 35% are business to business and business to customer, and about 28% are in the business to customer space. Some of the highlights that came out of this particular section was, one, the cost of last mile delivery still poses a challenge in terms of delivering services in the business to customer segment. And so because of this, actually some fintechs within the B2C space have what we're referring to as B2B2C, so leveraging business to business infrastructure to eventually meet your customer in the last mile. The other thing we sought to understand was the various stages of development for fintechs, and we categorize them in 4 categories. The first is validation, and validation stage, fintechs are essentially still in the ideation stage and looking to find a problem solution fit. The second stage is early stage, at which stage a fintech has a minimum viable product and is still refining or fine-tuning their product market fit. In terms of revenue, these are below $25,000 USD per annum. The second stage, the third stage, which I think is our broadest, is the growth or scale-up stage. And these are businesses that are now focusing more on a business model fit and growing their first generation product. You're also beginning to see at this stage some development of second generation products, or not necessarily second gen, but additional product lines built off of their first generation product. In terms of revenue, they're between 25 to about 750,000 USD per annum. We also have a few mature fintechs within our market. So these ones are really now looking for long-term business sustainability, and scaling and building an organization that supports the sustainability of the business in the long term. They'll have several product lines built off of their first offering and are really serving the mass market and pulling in revenue upwards of 750 USD per annum. I won't go through the percentages because they're pretty clear, but I think the key takeaways is one, that a majority of our fintechs in our market are, and this is just purely from a business count perspective, a majority are still in the validation and early stage. However, we do have a significant portion of fintechs in the growth stage, about 28%, which presents quite an exciting opportunity when we think about the growth of the market. The other thing that we wanted to understand was the source of funding. I won't go through each segment, but essentially a majority of fintechs are either bootstrapping or leveraging resources that are immediately available to them within their immediate network. So what we refer to as family and friends. The other notable thing here is that about 9% of fintechs within our market have been able to raise financing upwards of 500,000 USD. And that's pretty promising and impressive when you think about the size of our market and the opportunities that exist, and really does present a trajectory for growth. The other thing I think that would be useful to highlight on this slide is between that, what's this, about 76% of fintechs that are either bootstrapping or leveraging resources available to them from their immediate network, and that 9% that is able to raise funding primarily from international investors, there's this huge funding gap, and it's typically between about 10,000 USD and 500,000 USD. And this creates what we refer to as essentially the missing middle, where you have grants that can cater to small, relatively high-risk ventures that are still at ideation stage. You have microfinance, which is more accessible, but carries a relatively high cost, especially for longer term financing. And you have commercial lenders who are more interested in larger entities with landed properties. Impact finance presents an opportunity, but has a very limited understanding of the fintech sector and its potential for economic impact, especially with how it relates to job creation and employment opportunities. The other thing that we wanted to understand was how fintechs are made up in terms of their human resourcing. A vast majority of fintechs have either between 2 and 5 employees, and that tracks given the diversity of skills that you need to run a fintech business. We also saw a significant portion, about 23%, existing as partnerships, and these partnerships will typically try to combine the finance side and the technology side. A more limited number, about 19%, had more than 5 employees, and this was typically your growth and mature stage fintechs. And very few were run by sole individuals. And again, that is relatable given the diversity of expertise that's needed to run a successful fintech business. The other thing we wanted to understand was around gender representation. And here we found that only 3% of fintechs have women-only founding teams. And this is really only alarming looking at the alternative, which is 62% having male-only founding teams. But a good portion, about 33%, had a mixed founding team. We used HQ location as a proxy for local versus international ownership. It's not perfect, but it was the closest proxy that we could find. And here we found that about 60% of fintechs are headquartered locally, and a significant portion, also about 40%, are headquartered internationally. And this really does present a unique opportunity, one, to grow the local fintech sector, but also to eliminate barriers for international investment in the fintech landscape. Now into some of the themes that kept recurring in some of our conversations with various fintech ecosystem stakeholders. The first is that payments infrastructure remains critical for several fintech verticals: digital credit, investments, insurance. And within this, interoperability of the payments infrastructure is also still key for whether it's customer acquisition, collection of funds, disbursement of funds across various wallets, accounts, etc. The second is what we refer to as that missing middle, that funding gap for fintechs that are post-validation, so have achieved that product market fit, but are pre-growth or pre-scale up and are really looking to grow. The third is that the talent pool is still limited, but is growing. And this presents both an opportunity and a challenge. A challenge, one, to create competitive packages that can compete with the international market, but an opportunity, two, to leverage international talent for local development needs. The other bit is around the digital infrastructure and digital skills environment within which fintechs are operating. And primarily this pushes towards scale because especially for fintechs that have a business model that's built around low average revenue per user, their success is heavily correlated to their ability to profitably scale. And in an environment with low smartphone ownership, low internet connectivity, low digital skills, that becomes very challenging to do. So there's a role for other ecosystem players to play there in assisting scale. With regards to customer protection, there is no one-size-fits-all approach, and it still does seem to be, although there are umbrella tools such as the regulatory sandboxes that we've seen from both the Securities Exchange Commission and the Bank of Zambia, there does still seem to be a need for that case-by-case evaluation, especially when it comes to regulatory reform, and that is a human and resource-intensive process. Our market seems like a very balanced blend between collaboration and competition. And I think MNOs probably, as we'll discuss on the next slide, are the perfect example of this, where you have in-house internal development of fintech products and services, as well as partnerships with other stakeholders to provide additional services. This one I'll dwell on a little bit, and it's Zambia's potential to emerge and solidify its position as a regional hub. Our market is much smaller than South Africa, which is the regional market and is considered one of the big four, but it's also much larger than some of our neighboring countries, if you consider Botswana, Mozambique, Malawi, Zimbabwe, etc. And that really creates an opportunity for Zambia to emerge as a hub within the Southern African region and beyond, but also creates an opportunity for regional expansion for local fintech. The final point was one of the previous slides around gender representation. And again, this is only alarming considering that 62% are strictly male-led as opposed to 3%. But we do have that happy middle of 33% that have a mixed leadership team. We decided to look at MNOs and fintech a little bit differently or a little bit separately, or highlight them a little bit separately from the broader fintech ecosystem, primarily due to the difference in nature of their business model and it being built on this large GSM offering. And within that, there were 5 key things that came out of our discussions with MNOs and fintech. The first is the massive product diversification that's happened over the last 2 to 3 years. We've seen an adding on of products and services beyond payments, from investments, insurance, etc. The second is that the agent network is still one of the key entry points of cash into the digital or into the mobile money ecosystem, and that will remain true for the foreseeable future. The third is around this need to expand the merchant value proposition as the next phase of fintech growth within the mobile money space. Customers are daily interacting with merchants for various products and services. And as you bring the merchant into the digital financial ecosystem, just that opportunity to expand that offering. The fourth is around the constant development of new use cases for their APIs. Right now, it's heavily focused on payments, but that ability to grow beyond that. And then finally, something that we touched on earlier was around partnerships. So that we're seeing more and more partnerships between mobile money operators, banks, MFIs, and other players within the fintech ecosystem. And I think this is perfectly summed up in the quote shared by one of the fintech ecosystem stakeholders, who mentioned, we're not fighting each other, we're fighting cash, and that is the common enemy. So just pretty much this idea around collecting collectively collaborating to broaden, deepen, and expand the digital financial ecosystem, given the costs that cash presents for digital financial service providers. The last set of slides is essentially, okay, given this is what our market looks like, what now? And from an ecosystem perspective, there's a role that every stakeholder can play essentially in supporting the growth of our fintech ecosystem. The first point is around regulation and policy making. And really, it is a challenge regulating an ever-evolving landscape, but there's really no two ways about it. Human and financial resources need to be poured into that, especially to enable innovation while still protecting the customer and protecting the integrity of the financial sector. So within kind of a resource-constrained environment like our country, what that looks like on a case-by-case basis will be different. Innovation partners still play a very critical role, especially in skills development, building investor readiness, facilitating linkages for small startups, especially ones that may not be able to pull industry heavyweights to the table for a discussion. Some innovation partners are able to offer all of these services seamlessly. Some innovation partners may need some capacity strengthening on one or two of those activities. The third ecosystem insight was around interoperability. And essentially this need to enhance interoperability to enable the efficient movement of funds across the financial ecosystem and enable the provision of different services based off of our financial infrastructure. The good news is that we have a lot of the tools to be able to expand this, whether it's our national financial switch and building the resilience of that and building in new use cases for that, or it's leveraging existing fintechs that either provide payment switching or payment gateways, or it's expanding the use cases for open APIs within the financial industry. The final point is, as our fintech ecosystem grows, a lot of data grows around it. So there's really this onus on each fintech stakeholder, be they policymakers, be they investors, be they fintechs themselves, with regards to product iteration. There's really this onus to understand, absorb, and utilize data for those various functionalities. The second bit of insights was around the talent that's available to support the growth of the fintech ecosystem. And within this, there were three key insights. The first is that the biggest challenge regarding talent is the drain of skilled professionals as work becomes increasingly digitally available and international companies can offer better employment opportunities, and not just international companies, even companies within our local market. So within this, there's kind of a need to strengthen, I say strengthen because this is already happening on the market, but strengthening linkages between ICT training schools and the industry to expand the pool of graduates that are coming into the working world with real world experience. The second is the fintechs companies growing to be able to compete with global offers for local talent. And this isn't strictly a remuneration conversation, but just that now you're competing not only with companies within Zambia, but the global fintech landscape. The final point is around the need to develop affordable pathways towards accessing specific skills, such as data analysis, policy compliance, product development, finance, etc., given the breadth of skills that are needed, and this is presented in the image to the right, given the breadth of skills that are needed to run a fintech business, but then about 70% of our fintechs are either bootstrapping or leveraging resources that are available within their immediate network. How can we then create affordable pathways to access some of these skills that are needed to run a successful fintech company? The second to last slide was around the business models themselves. So the first is this challenge for scale, especially for businesses that have a business to customer model. And given that low average revenue per user, what role can sustainable, mutually beneficial long-term partnerships play, but also what role can the public sector play, whether it's enhancing investment in digital infrastructure or it's providing incentives for market development? Essentially, how do we support promising companies whose biggest challenge in our context is scale? The second is around incentivizing market development, and maybe incentivizing is not the right word, but essentially we expected to find a few more fintechs in the validation and early stage that were looking at different fintech verticals, especially around investments and insurance, but that wasn't the case. And this leads me to my third point, which is there's very little known about certain pockets of our market, such as the informal sector, smallholder farmers, you can think of others, rural-based savings groups, but essentially these pockets of our market that have financial and economic lives for whom products do need to be developed, but very little may be known about. So that need for whether it's development partners, whether it's regulators, whether it's policymakers, to conduct research around that enables the development and prototyping of products within those fintech verticals. And the final point is around corporate governance. Essentially, every single fintech that we've spoken to that has had success in raising funding has robust, responsive, and appropriately structured corporate governance structures. The final slide is around capital and investments. And given that existing funding gap that we spoke about, which ranges between 10 to about 500,000 USD, what can actually be done to enhance financing that's available for fintech growth? And the first is that need to develop financing options that are specialized for the fintech sector, that are more flexible than debt, but that are larger than grants, which is the majority of what's currently available. The second is the need to structure flexible and appropriate investor agreements that match the multiple iterations and business pivoting that fintechs typically go through. And the final point is our capital markets present a significant opportunity for raising financing from local investors in local currency. So what are some of the reforms, developments that need to happen to enable that to take place? And that is it. Thank you. I will hand back over to Mali.
Thank you so much, Samantha. That was really insightful. There's a lot of information in there that we need to unpack, and we will unpack with our panelists. And I also see that there are a couple of industry experts, I recognize the names, who have sent through some questions. Those questions will be responded to in the Q&A portion of the program. So thank you very much for that. I've taken note of those questions. But I'd like to now introduce our panelists this morning for our discussion. And it's, as I said before, this is an esteemed group of industry leaders, and we're really fortunate to have them here today, and we thank them for their time and their participation. We were due to have Mr. Elias Chipimo join us, but unfortunately he's been taken ill with the flu and won't be able to join. And then Ms. Evelyn Kayingu has also heard of an unexpected situation that she has to attend to. So unfortunately, she won't be here with us. But Robert Peary from the Payers Association will take a place on the panel in their stead. And we know that there's obviously much more insight that he can give to us as a key player in the sector as well. But for the other panelists we have this morning, we have Mr. Komba Malukutila, who is the managing director of MTN Fintech. Good morning, Mr. Malukutila. We
Hi,
also
have,
oh,
how
great.
are
There
you
you are.
you able to hear?
Yes, we can hear you.
Okay, happy to be here. Thank you very much.
Okay, but we can't see you.
Well, I have turned on my camera, so possibly you've got a permutations issue on your side.
Okay.
But otherwise, it's on. I mean,
Okay,
I would love
right.
but let me see what I can do to work on that. Ah,
Okay.
I think my camera is facing the other way. Just
yeah, it's facing the other way.
Well, once I figure it out, you can try and introduce the rest of the panel. Okay.
Great, thank you. We can hear you though, so that's great. We also have Ms. Mutomboy Mundia, who is the Director of Market Supervision at the Securities Exchange Commission in Zambia. Good morning, Ms. Mundia.
Good morning, Mali, and good morning, everyone else that's on the call.
Thank you so much for joining us. You look great. We can see you very clearly. So we'll just wait for Komba to sort his situation out. This morning, we're joined by an external moderator. We have Sandy Chimpala, who is the founder of the Tech Trends site and also the Tech Awards here in Zambia. She will be moderating our conversation this morning, and really excited to partner with her on this because she is well known in the sector and has a great depth of knowledge and information on what Zambia's tech space looks like. Good morning, Sandy.
Morning, how are you?
Great, how are you?
I'm good, thank you.
Thank you so much for being here. I'll hand over to you. Oh, and then of course we'll have Robert, who will join the panel since we had a little bit of a gap there. But yeah, I'll hand over to you now. Thank you so much for leading us through this discussion.
Thank you so much for having me, and great insights by Samantha on the fintech landscape in Zambia. But it's now nice to kind of hear from the players in the ecosystem, actually. So first things first, I will ask everyone in the panel, Mtumboy, Komba, and Richard, basically what the biggest surprise was for you when you went through the report or the assessment by UNCDF. Anyone can feel free to take it up.
Yeah, so maybe I can start first. Hi, Sandy, how are you doing? Am I audible now?
Yes, you are.
Okay, thanks. So first of all, just like to introduce myself to the audience. First of all, really happy to be here. I see a lot of familiar names when I go through the participants box. So really happy that everybody could join and just participate in this short discussion. My names are Komba Malukutila. I look after MTN Fintech here in Zambia. And I've been at this, I think, for the last 5 years. I'm looking after Zambia's fintech outfit for MTN. But I have also had a 15-year career in MTN, cutting across different portfolios from tech to commercial. So it gives me a bit of a leverage and an understanding of our whole tech and now financial environment. So just happy to come and share what we're seeing so far. But now to answer Sandy's question, I think what stood out for me is the gender imbalance with the fintech startups. You know, no surprise of mine when I look at the statistics also of a lot of females even within the organization that we operate. I think fintech is still very male dominated and male skewed. So that is a lot of homework for us as industry players to deliberately create space and extend a whole lot more opportunities. So the next time this survey is done, we're sitting as balanced as this panel discussion is.
That is good to hear. We do hope for more representation in that space. Mutimboy, anything that stood out for you from the assessment?
Thanks, Sandy. So perhaps let me do likewise as Komba has done. So really just to also introduce myself. So as has been mentioned, I am Director of Market Supervision and Development here at the Commission. I have held this position for just over 10 years. I think it's really a humbling sort of a position to be in a regulatory setup, and mostly at a time such as this one, when we really at a very interesting intersection of our developmental agenda as a country. And for somebody like myself who studies markets, eats and lives markets, and has basically spent a lot of time strategizing around how we can develop our own capital markets, I really was impressed to see what has come out of the study. And my impressions are that we are really making quite notable progress that we need to not take very lightly as a jurisdiction. I was amazed to see how we've grown in terms of the numbers of the fintechs that were formally identifiable for as little as 25 to over 100% of that. That is something. I was also intrigued and remain a believer of some wording in the document that speaks to our potential as a jurisdiction for us to be a hub for technology, for innovations. And we at the Securities and Exchange Commission, I think our legacy stands to speak for us that we have taken the aspect of innovation, the aspect of fintechs extremely seriously, and taken leadership more so from a regulatory perspective. So that really summarizes my exciting impression about the documents.
All right, thanks for sharing. We'll come back to you with regard to the regulatory sandboxes for fintech innovations. But first, Komba, I'd like to speak with you on the part of MTN, especially with mobile money, because now you're providing, MTN Zambia provides services as an MNO and also as a fintech. But can the company be seen as a competitor to smaller fintechs on the market or as an actual collaborator to boost growth of the fintech space on the market?
Yeah, this is a very common question that we get, Sandy. So I'm going to break it down.
Yeah.
The fact of the matter is no. So the simple answer to your question is no. In no way a competitor. Quite on the contrary, an enabler. And I say enabler because we carry pretty much all the fintechs on our platform. We carry all the banks on our platform. The reason why this is because we have got the customer wallet, right? We have the access to the customer. Our main role that we play in our ecosystem is to enable other fintechs have easy access to the last mile customer. So you're looking at between all the MNO players, and I speak from an industry perspective when I give these answers, please, is over 11 million Zambians enabled via mobile money across the country. And the penetration is quite high now, sitting just over 60% out of the population of close to 19 million people. So without us, then access to the customer becomes very limited. So our role is to make sure that all the fintechs, all players, banks alike, would have access to the customer. We have methods and tools in place to go right down where no bank infrastructure is comfortable to set up. We're in far-flung areas, offering financial services, offering financial education, financial literacy, because once the customer has got access to the wallet, they are then enabled to this whole universe of fintech. And so in the last 5 years, there's been a very big evolution in terms of partnerships. And I saw it as part of the points from the presentation around MNO's focus on collaboration and partnerships. So be it the Lupias of this world, Zazu, to the banks, to the payment services providers like your Kazans, your 543, all of them find themselves integrated into our platform with the sole purpose of being able to provide the last mile customer with a service. So collaboratively, then we work across the industry to be able to enable this kind of services. So yeah, there you have it.
Thanks a lot, Komba. So just in line with the payments, I think I'll switch now to Robert. So Robert, maybe you can also tell us what one thing you found from the assessment that was a surprise for you, because you are working with a group that actually brings together all the payment providers in a way, or any companies that have to do with payments. So maybe you could just tell us what was striking for you. And then after that, tell us what fintech could do in like fintech startups or existing startups can do to actually make themselves more attractive to more investors, especially in international investors.
Was the fact that And the further stuff that this is issue.
Robert, your sound is still poor. Is it? I think it's not coming through clearly.
Hello, Robert.
Is it better now?
Okay, your line is quite bad, so we can't really get what you're saying. I don't know if you're able to maybe try and switch networks.
I mean, to switch our networks, then maybe the discussion can.
Okay, all right.
Robert, just
Okay.
turn on your MTN line. I'm sure you should progress smoothly after that.
Okay, all right. So in the meantime, I think I can address like the whole panel while Robert fixes his network. So Mtomboye and Komba, if we speak about the entire like ecosystem, like we've seen international investors bring in, fund local fintechs, maybe 3 to 4 deals, upwards of $500,000 over the last 3 years. But we don't see many local investors in the fintech space. Do you think there's any way that we can enhance this local investor participation? And obviously, this is just from the fact that you are either in the on the regulatory side of the space, or you are actually providing a service in the space. But what do you think can help boost it in terms of investment now? Like, what can they do to make themselves more attractive?
Should I take a jump at it, or should I allow Mtomboye to start first?
Yeah, maybe I could start first, and I'll be real quick about it.
Sure, go ahead.
Yeah, I mean, like I said, when you read the document, it actually gives you a lot of hope in terms of where we stand as a jurisdiction. And it's not just an issue of fintechs where you see foreign investors coming with a bit more capacity in terms of what it is they can invest in that space. I think for a market like Zambia, it basically applies to more or less every other sector. You can make the same observation about the mining sector, for example. You can make similar observations about the banking sector. I would just be so proud at least to say the capital markets doesn't really take after that sort of pattern. And there is an explanation in country with a huge funding requirement for whatever innovations or whatever development that we seek to undertake. So naturally, for me, I do expect that would have a lot of external participation. I'm one of those people coming from the capital markets that embraces that as a validation in terms of just how lucrative our projects are and the market is. But it's also critically important that we begin to harness as much local investment that we can, to the extent that we can. And I think we can do better. And basically for us who are running a regulatory sandbox, it's actually what has excited us, because we are actually able to see local investors, and some who are in the diaspora, and sometimes it's difficult to classify them, really coming through to participate in investing in these innovations. And we've seen that at 2 levels. So there's the interest of wanting to support, for example, a Lupia, a premier credit that's seated in the regulatory sandbox, wanting to support it in the sense that the local investors have been willing to stand on the side of the market that we rarely see interest in, which is the side that is providing the capital. So we've been able to witness that transition already beginning to happen in this market. And perhaps, yes, there's a lot more we can do to encourage more local participation into fintechs. by way of doing what we've already started in terms of the regulatory sandbox, but how do we really bring credibility to the process that we are embarking on as part of that regulatory sandbox? For me, I think that's a challenge that we sit with as regulators, both central bank and ourselves who currently have sandboxes.
Okay. All right. Komba, any thoughts on basically making our fintech space investor ready?
Yeah, sure. Happy to share some thoughts. Okay. So just for context, this fintech industry is globally a $1 trillion industry. Okay. Very big industry. 70% of that is in Africa. So Africa is very well poised and positioned to drive fintechs, by and large, because we are pioneering this whole mobile money industry, and that's where it stems from for us. Okay. Reason being is because we've got a very interesting sort of landscape from a rural to urban migration, and mobile money flourishes quite a bit in those types of setups. Right? Now, to bring it a little bit home in Zambia, we are simply where fintech adoption is concerned. And we're facing similar challenges to what most sub-Saharan countries are experiencing, is just the basic understanding of what fintechs are, all right? And so we've got a lot of work at the grassroots to get our subscribers onboarded and connected. So fintechs range from basic receiving money to blockchain and AI and all of those things that, you know, first world countries are talking about in the context of fintech. But for a Zambia today, an average Zambian is just trying to get their mind around access to financial services, formal financial services. Do I have the wallet? Can I deposit on my wallet? The money that I put on my wallet, can I earn an interest? You know, can I receive money from my son that I sent to school abroad in China, you know, et cetera, that grandmother in the village is completely isolated once she sends her children out of the village and to get an opportunity to make it out there in the world. She's completely isolated from tech, all right? So our problems are very, very different, and let alone to even attract funding, right? So you now say local investor, and let's narrow down who is a local investor, all right? So these are the 10, 15, 20 Zambians who have got access to finance, and you're basically asking them to invest in something they barely understand. So investors are happy to invest in agriculture. We know how to sell chickens, you know, we know how to produce eggs. That's what we're used to, you know, but the education around blockchain, AI, financial services, let alone mobile financial services, hasn't penetrated the minds of the investor. So environments such as this one, you know, the UNCDF, FSDZ, the regulator, the MNOs and fintechs alike, effectively have to go on roadshows, all right, educating investors in terms of what is the opportunity that lies out there. When you put your fund into fintech, how do you then multiply that fund? And how much of a grace period do you need to give fintechs to be able to turn a profit? Because we're not very profit-making outfits. So all of us, our gross margins and profit margins are very low. So to make an investor understand that putting money in our business, you're not going to be turning a profit in year one, let alone sometimes by year 5, you still haven't broken even. I mean, we've launched businesses that 5 years in the making have not turned a profit. Mobile money, the service that you have come to enjoy now, it took us 8 years before we could see our first profit as providers. I think all these profits came in the last 3 to 4 years. So understanding that and then seeking investment, the work is really, really at the grassroots, and there's a lot of education that needs to be sought. It's not for a lack of resources or a lack of financing, but a lot of the work being done on the basics and on education and information dissemination, aligning these investors on the importance of investment and how the profit story runs where And this is the work that we are doing right now as MTN Mobile Money, or as we go on our investor roadshows. It's mobile money 101, you know, before we can see the first dollar from these investors. Yeah. So yeah, that I'll expand on it in a little bit, but just to paint a picture, I thought that I start from an African context and then just bring the story a little bit more closer to home.
Sure. Okay. So just writing on that, when you were talking about resources, I mean, human resource is one. So I'm going to speak onto the talent side, because now there's innovations coming up that require new kinds of skills, or an upskill of already existing positions. So is there a plan, like with MTN specifically, or maybe just for the industry itself? Is there a plan to fulfill this new talent need that is emerging in Zambia in this space? And then also, do we need specific initiatives in Zambia to fulfill that talent need? Or what role can we actually play as part of that?
Yeah, this is a very emotional topic for me because one of my team members resigned this morning and I almost canceled this call.
I'm so sorry.
So I could take them for a coffee and understand like what's going on, you know?
Yeah, the problem of talent, yeah.
It's the first resignation we've had this year, and I thought I had this thing, you know, under control, but you know, as good people get in such a limited talent pool, I mean, people are going to be sought after, and that's the challenge that we face. You know, you spend so much effort bringing talent up and investing in them, and because the talent pool is so limited, it's the same resources that have to go and support the banks. They need to support the regulator, because the regulators also wrapping their head around this industry, and sometimes they need people from industry to come and enlighten them in terms of how things are operating in sector and so on and so forth. So we're sharing talent amongst ourselves, going round and round, and sometimes we'll also need people from the regulator so that we know how to navigate their mindsets a little bit better and avoid fines and, you know, be a lot more supportive and so on and so forth. So the talent pool, in practical terms, guys, it's tough, you know. But here's the thing. The truth is there is no fintech talent out there. When you look at curriculums and faculties, even in universities, I think there's not more than 10 universities in the world that have got a fintech curriculum. All right, and all of this is in the last 5 years. Okay, so I know the first Zambian 2 years ago that went to the UK to go and study a master's in fintech, you know, and that was such a big deal. Such a new industry. We're learning as we go. You know, I always liken to flying a plane as you build it at the same time, you know. So it's exciting on the one hand because everybody gets to learn, but can be quite a daunting task in terms of grooming talent and retaining them. And that's the work that we're going to all have to put our heads together in terms of, do we then set aside a talent pool and academies and R&D within each and every organization to be able to build this talent? We're getting these fresh university students, you know, we're hiring not skilled talent, we're hiring enthusiasm, and then they come into the organization, and then we build that talent here and we share it amongst themselves. So it's an industry course because this is stuff that hasn't been done before. It's not mature services like traditional banking. There's quite a bit that is going on out there to be able to build that talent pool. So to answer your question, it's tough, but it also makes it all the more exciting because it gives opportunities also at people who aren't necessarily skilled in one particular sector to join our environment and just gain a wealth of knowledge. So yeah, it's a two-edged sword. But practically, this is what we're doing with, and I'm glad this happened right before this course, so I could actually inform you from a practical perspective.
Okay, Thank you so much. I think now we can, we've been talking about the regulatory sandbox for like the entire conversation, but maybe Mutumboy, now you can just tell us, we know both Bank of Zambia and the SEC have regulatory sandboxes to test fintech innovations for a period of time. But there've been relatively very few numbers of entrants into that space, into that testing mode. So are there channels, are there other channels or opportunities needed for this testing to happen? And then also, speaking on behalf of the regulators, do you think that other fellow regulators are paying enough attention to the fintech as a vehicle for growing Zambia's finance sector and ultimately the economy?
Thanks, Sandy. And maybe just before I come to that extensive, I think it's a 3-in-1 question.
Yes,
I really wanted to pick it up from where Komba left in terms of the talent. And I've gotten notice via some of the things he said. He's been very clear that he's looking for people that will come and assist on the regulatory front. I'm threatened. That sounded like a poaching in the making of regulatory staff. But I just really wanted to agree with you that it's really tough, and I can't even imagine what that would do to us currently. Because actually, in answering what you point out, Sandy, in terms of the low numbers that have participated in our sandbox, talent still pretty much comes as one of the challenges that we face as regulators. And this time when I say talent, I'm saying more of what we're seated with currently in terms of even just the way we are structured as regulators. So one of the things that we have discovered, having run the sandbox for 2 years now, slightly getting over that, in fact, is it's very intensive to work with innovators. You need to literally have specialized teams that can understand not just a techie side of things. And I think that's also the discovery that we have made. So whereas we thought we'll just struggle on the one front of not having so many technically skilled resources, we actually realized that you need beyond just IT or software developers. And the same applies actually with the businesses or the innovators themselves. You realize that, well, they can be very strong on one form of talent, but they're missing out on maybe, say, accounting skills or accounting talent. And that in itself becomes such a big stumbling block in terms of progressing the innovation. And it's one of the issues that we are grappling with in on how do we screen. So whereas you're complaining that we were not even admitting that many as was expected, we're actually thinking of, in fact, trying to revisit that criteria of how you get into the sandbox, because one of the things that we wanted to achieve out of the sandbox is basically to work with projects that are coming kind of ready to go to market. So when we say ready to go to market, it's not just in terms of the product itself, but it's also in terms of your team that you've assembled together to run this business. So do you have competent accounting staff? Because that side of governance will make or break your business. And when you talk about getting into markets like capital markets, governance becomes a very big issue. So do you have strategists as part of your team as well? Issues that we're grappling with. So we would like to increase the numbers, but maybe just to summarize the point is we're struggling in terms of how we are structured currently. We don't have a team that is dedicated and running with this, and we do feel that there is need for a regulator like ourselves to now justify for a team that will basically run the sandbox, that will interact and do some of the things that Komba referred to, there's a lot of awareness that is needed, even just in terms of basics understanding of the fundamentals of what a fintech is. And also moving away from just the way we are reorganizing ourselves. And to mention, you know, we had something very interesting happen to us with a colleague of mine. And sorry, I'm grappling sometimes with speech because I'm just recovering from a flu, but you bear with me for now.
Don't worry.
Yeah, so we met one of the innovators, and they basically say to us, oh, we understand the regulatory sandbox that the Commission has now closed. Because the government, actually, they say this to us, the government is no longer funding you or something. And we were really sad to hear this for ourselves. So firsthand feedback, and we said, no, please don't bring the government into the picture. And we haven't closed the sandbox. What has happened is we've realized that, you know, it's very resource intensive. And the process that we envisioned at the time we're creating the sandboxes may not be what it has turned out to be. So we're having to spend a little bit more time on the current innovations. I mean, we took 4 innovations at a go. And so we explained that we were going to be opening up the second cohort, but it's going to be a different experience for the second cohort, because we want to make sure that, you know, we don't keep the innovations as long as we have kept this first cohort. So that means we're tightening up the criteria, but hopefully what that will do is not continue with this statistic of where we have very few players in the regulatory sandbox, because we can't even afford it as a jurisdiction to continue with small testings or small numbers of testings. You also asked whether we should be thinking about other avenues as a regulator. And I think yes, because this is a game of strategy. And like I've just shared with you, we have introspected in terms of what the first cohort experience has been. We've gone to our board literally to ask for a reorganization in terms of giving that unit, which will sit and live and eat with the innovators a bit more than you can do when you're juggling a few other things. And sometimes it's very hard for market players to realize just how intensive and sometimes how impractical it is from a regulator's standpoint to really give you that attention that you need. But just think about it for a moment. The supervisor that you see, first and foremost, if you are familiar with the Commission, you can actually count how many those supervisors are. And they are having to run from different functions, from licensing, from inspection, from ensuring that we are migrating risk-based supervision, from doing sustainability, financing, and all manner of other things, projects that, you know, that are equally important. So reorganizing for us is critical, and our board has supported that. But also what we would want to emphasize is the general marketplace also needs to respond to the initiatives that we're putting in place. So other interventions from the public sector, development finance institutions, in terms of business support are very crucial, because the regulator will be needing to interface with innovations that are advanced to a certain level. But who is that party that is working with the innovators to advance it? So collaborations with the incubation hubs is something that we can improve going forward, just so that we can have this ecosystem that is really interconnected and is working towards one goal. Like I said, it's a game of strategy. Zambia has to position herself, but how you do it is through what we're doing here, having the conversation, understanding the different pain points, and then agreeing a strategy at a national level.
All right, thanks, Ntombo. I think you actually answered my next question for you, which was about like the plan for the successful pilots in the sandbox right now. Like, what plans you have, you know, given that their testing window has come to an end. So what will be there? Like, what plans do you have to enable the growth of them? But I think you've answered that when you talked about collaborations with people, partners such as innovation hubs, other fintechs, regulators as well. So I think that ecosystem of support, I think, would still be valid even after they go through the regulatory sandbox. So just, we're almost winding up, but I think I need to understand your views on UN Comba as well. Basically, the assessment showed a lack of women participation in the sector as a whole. So specifically, in your view, what can be done to change this scenario in Zambia, just to get more of the girls in?
The ladies have, Comba, I know you're going to go soft on the ladies. The ladies have what it takes. I mean, I was on the COP about the other week, and the ladies there organized themselves, and they asked me to speak to motivate them. And I just told them that you sit with skills that you sometimes are shy of leveraging and harnessing. And I call these kitchen skills. I just think that if you're familiar with the kitchen, there's nothing that you can fail to do. And what we need to do is basically have these one-on-one conversations as ladies to showcase how those kitchen skills actually translate to very strong skill sets that are needed even in what would look a mature world like fintechs. So it's a long conversation. You don't want me going there. We'll be here for another hour.
Another discussion. Yes. So maybe let me move on to Comba. Comba, what do you think we can do to enhance women participation in the fintech sector in Zambia? Just very quickly.
Yeah, I agree with Mutomboy. It's it's a whole day discussion, this one. But I think that it's a two-pronged approach. I mean, I'll speak very practically. In our environment, we've got a 50% target to get, women in leadership within the fintech, right? Unfortunately, I see more women putting their hand up for the support roles, legal, regulatory, HR, that's where I get the bulk of applications. And then in the more tech product development, system development, commercial tiers, I see more of the gents putting their hand up. But I think that we need deliberate policies within organizations that really uplift and position women for these jobs. I think this is beyond the fintech discussion. It's a cultural discussion. I think you need to go and start with your folks first and find out why they positioned boys to go to tech schools and the ladies to go to craft. So now an opportunity to change the narrative, but it's not going to go away overnight. I think we're going to have to do deliberate steps to shift the culture where this is concerned. And it starts with deliberate things like policy implementation, road shows that are deliberately putting women at the front, and also allowing tech environments, men or women, need to have a threshold for failure, right? So you need to tell people that it's okay to make mistakes, and there will be a threshold within which you will be allowed to make mistakes and to learn from them. Tech environments have never enabled mistakes and failure. But in tech, if you don't fail, you don't learn. We only learn from our mistakes. So I think when that is a little bit relaxed and it's made more practical, you find that people will be more receptive to come in knowing very well that it's job on training,
Yeah, no,
so
that is true.
Those are answers I can give out.
All right, so just my last question to both of you. I don't know if Robert is back, but yeah, what would you say you would like to see happen in the next 5 years in this space? And please just make it a sentence so that we can now go to our Q&A. Robert, please let me know if you are able to join the Q&A session at least. But yeah, so basically in a sentence, what would you like to see happen in the fintech space in the next 5 years?
So there is a vision that we pursuing as a commission. It's a vision where we want Zambia to be to reposition ourselves as a preferred destination for investments. So in that vision, we see Zambia really stand out as a hub for many things. We're running with one for sustainable financing, but there's nothing that stops us from actualizing what the study has said. that we can actually be a fintech innovation hub. So I'd like to see that in the next 5 years.
All right, thank you. Komba?
So for me, in very simple terms, is I'd like to see more big brother organizations providing real help to facilitate the smaller fintechs to enter the landscape. You know, for example, and I don't mean to blow our horn, but on a yearly basis, annual basis, we do these hackathons, right? Which generally enable every fintech, small developer, big developer out there to come and participate in a challenge and gain access to funding, you know, accelerator programs. And Lukonga and Sumunza should have been on this panel, rightfully honest. They've done uploadable work in this space, just building small organizations, seeing them through. I think they don't get thanked enough, Bongo High, for the work that they have done. But quarterly, monthly, these guys are taking small SMEs, fintechs through accelerator programs and facilitating a lot of the funding that you have seen come to fruition. And that is hard work, you know, but people need real help. So beyond the panel discussions is having incubator programs within organizations. And I see banks taking up space. ABSA did the most recent one. And I see more MNOs taking up space. But you know, beyond that competition, beyond the hackathon, can you identify 2 or 3 fintechs that you will actually give a fund, you know, and see their product through to, you know, commercialization and have it become an actual thing? That even if you picked, you know, 5 out of the lot and you saw them through for the next 5 years to maturity, having said initially that these things take time, it makes a considerable difference. So we've got an onus and an obligation to carry a lot of the smaller fintechs through to the next level. So I think that would be my 2 cents, Sandy.
All right, thank you so much. I think now we can open up our Q&A session. We have a few questions from our audience here. The first one, which I saw that is really striking, is from Esther, and she's basically asking about talent. What are the top 3 skills that we are lacking in the Zambian market? So the panelists can feel free to take that up and respond to that. I think it will help someone who's trying to build their talent in the space.
Mutumbo, you want to take an initial jump at it?
I thought you'd actually make a better assessment, because I don't want to sound that I'm giving a public assessment of the few innovations that we have. So I'll allow you, with your interactions with the likes of Bongo High, perhaps to speak to that.
Sure, no problem. The first skill I would say, and the most critical one, is enthusiasm, Sandy. And I think that initially I had indicated that in fintech, we seldom hire talent, okay? Skilled talent. So I'm not looking for the best computer programmer or the best financial analyst to come in and take the role. I'm looking for the curious mind, the mind that is willing to try, to learn, to go the extra mile, to come and join an ever-evolving, fast-paced industry, because our industry is fast. It's demanding, and there's so much change happening all the time. So you need people with grit and with curious minds. Otherwise, you know, go and get your degrees, be it in business, in tech. Within fintech, there'll always be space for you. But to what extent are you willing to innovate and solve real problems? So if you look at when you look at the analysis and what some of the most successful fintechs, they're doing very basic things. You know, it's lending, it's crowdfunding, you know, and it's all built on solving actual problems. So you go out there in the market, understand what is grappling or not working within the agricultural sector, and can we offer them a solution within, you know, fintech to enable them solve whether it's crop, you know, disease detection, and then you send information into a database and it diagnoses what is going on, and you know, you get charged the fee on the go. and so on and so forth. So the talent is really in enthusiasm and trying out new things. And also lastly, there's no business that runs in the absence of finance. So on the one end of this thing is technology, but there is a very critical component around understanding a business case, right? For any business you're going to get into, especially fintech, you must be able to show your profit and loss. You know, I'm asking for this demand because we're in such a demand stage and we're asking for money and we want resources, but have the basic skill to be able to show that with this investment of resources, this could be the potential gain. Anyone who you're going to ask for financing or support, I mean, Sandy, you knock on my door all the time, you know, the prayers that you're putting. And, you know, you've now learned to say, you know, Comba, before I ask for your money, this is the benefit to MTN. That is the platform I'm going to give you guys, etc.
Have to show that ROI every time.
That ROI, and 50% of the work is done when you're coming from that mindset. So
yeah,
I guess it's really in the basics, Sandy.
All right, thank you so much. Robert has dropped off the call, so it's just Mutomboya and Komba. And then there's another interesting question that's coming from Dinko. Dinko's asking, he says, I think it's important to understand how local or foreign ownership correlates to the fintech size in Zambia, both in terms of employee count and revenue and growth trajectory, that is. So do you have any insights to share about that?
I saw, you know, I did see this, the question, and really, I probably don't have any insights for him, but what I could perhaps do is to ask our manager financial inclusion to sort of get in touch. And I've just posted our contacts. Somebody else had asked for our contacts. And we can share maybe some data or some third-party reports that he has been looking at. But yeah, so I thought I should not dare give an opinion or any insights on this. Yeah.
In case you're misquoted. No, that is safe. So Digo, I think you will get in touch. You've got the contacts in the message box. And now, thank you so much, Mtomboy, for your input, and also Komba as well. It's a shame we didn't have the others. It would have been a very nice, well-rounded discussion, but I think you did an amazing job of trying to, you know, explain the opportunities and also give recommendations for what needs to happen in the fintech space from both the side of the player and also from the regulator. So thank you so much for your time. And for everyone else who's asked the question, your questions have been noted. Some are being responded to as we speak, but then others will be responded to after this session. So this is where I hang up my moderator gloves and pass it back to Mali.
Thank you so much, Sandy. And special thank you to Mutomboy and Komba. Your insights were really great, and it was a really good conversation. There's never enough time to have these conversations, unfortunately. So we'll just have to keep knocking on your door and asking and organizing other such engagements like this. Just to emphasize something that Sandy said, there are a lot of really great questions in the chat. I've been taking notes, some we have responded to, but we always share a Q&A document to our participants, and this will be shared like either later on today, but definitely we have taken note of your questions. Some of them are very important, and we don't want to lose these questions because they do add to understanding and the growth of the sector. So I definitely have taken that up and will ensure that the participants receive responses as well. And again, feel free to be in touch if you think that, you know, you have something else that you would like further information on. I want to close very quickly because we are past time, but just to thank everyone who has participated, not just in the FinTech Landscape Assessment itself, but in this particular event. Our work really depends on our partners and those who we collaborate with. So we are really grateful of the opportunity to engage with you and also just to work with you in this way. And thank you for your expertise and your knowledge and your insight and all of that. The link for the document has been shared in the chat. That link will be updated with further information by this afternoon. So please feel free to check that. And we will also be sharing it more widely on our social media channels. So please look out for that as well. But just to close this session, thank you all for those who have stayed to the end. I think it was really great. And again, special thank you to our panelists and to all those who participated in this assessment. Enjoy the rest of your day, and we'll keep engaging, not just at industry events, but also please be in touch on our social media sites. Thank you very much. I'll close the webinar now.
Thank you.
Thank you. Have a good day.
Thank you.
All right, bye.